Good day, and welcome back to the Life License Qualification Program video series presented by Business Career College Corporation. Again, my name is Jason Watt. I am one of the full-time instructors at Business Career College. What we're going to be working through for the next few minutes is the idea of whole life insurance. We're going to look at some of the inner workings of whole life insurance. We're going to learn what you need to know about whole life insurance. Now, you might recall from an earlier video or from your readings that whole life insurance is a form of permanent insurance designed to provide coverage for the entire life of the life insured. Premium structures can be done a number of ways. We can have a pay-for-life premium structure in which premiums will be paid for as long as you live. We can have a limited pay premium structure in which premiums might be paid until age 65 or for 10 years or for 20 years. Of course, if you choose a limited pay structure, your initial premium amount is going to be higher than if you had chosen a pay-for-life structure, but you'll get the policy paid off at some point and no longer have the requirement to pay premiums. So, when you originally acquire a whole life policy, you can count on seeing something like this. We're going to see really three known factors here. We're going to know exactly what our premiums are for every year that we own the policy. We're also going to know exactly what the face value and, for that matter, the death benefit are for every year that we own the policy. And we're also going to know exactly what the cash surrender value will be for every year that we own the policy. So if you wanted to draw this out, you would know that your premiums would be exactly the same year after year after year. There's no opportunity for any surprises or shocks here. You have the same premium every year. Your face value or death benefit is also going to be the same for every year that you own the policy. The face value or death benefits with a whole life policy is going to be level throughout the life of the policy. Now, when we talk about participating in whole life insurance in a few minutes, we'll see that there is some opportunity to manipulate this. However, with a run-of-the-mill, non-participating whole life policy, these two factors are going to be the same for as long as you own the policy. And your cash surrender value is going to be not necessarily the same for every year that you own the policy, but it will grow at a stable and predictable pace. Now, my chart's not going to be perfect here because there would be some compounding, that is, some growth on your growth. But the idea is that for every year that you own the policy, you'll see exactly what that cash surrender value is going to be. You'll know this when you acquire the policy. You'll have a guaranteed cash surrender value every year. Now, again, that's the case with a run-of-the-mill, non-participating whole life policy. So whole life insurance is pretty straightforward. There's not much to it in its most basic form.